Hello everyone, and thank you for joining us this early morning today, a little bit earlier than we usually present webinars. And in this presentation, I'm going to talk about how to properly fine-tune your trade entries. This is one reason why so many traders lose, is because many times they're actually right on what they think the market or the currency pair or the future is going to do. It's just their entry that is faulty. So I'm going to show you a really great way to give you a high probability in your entries. Now, before we begin, once again, welcome to this specialist trading presentation. We usually give these presentations in the afternoon. We have a little bit of scheduling difficulty today, so we're presenting our in-house webinar early this morning. If this happens to meet your scheduling and this is better for you, please drop us an email and let us know if this is working better for you. But usually our presentations are after the market. Sometimes we'll give them around 10 o'clock Pacific time, just so that we can fit scheduling needs. But oftentimes I'm speaking or I'm trading or I'm teaching, and so it's difficult to have a set time all the time. So anyway, welcome once again. For those of you who are new to my presentations, I am the president and founder of Specialist Trading. My name is Stephen Primo. I've been trading for 37 years. I started out on the floor of the Pacific Stock Exchange. I was on the floor for 16 years. I was specialist for 9 of those years. So that's where you get the name Specialist Trading. A specialist doesn't mean, for a lot of you people who don't know what that is, a specialist doesn't mean that you're special from all the other traders. What it means is that if you wanted to buy or sell an equity, a stock such as IBM or anything along that nature, and you wanted to purchase it or sell it, you had to go to the trader who specialized in that. So a specialist was in charge of roughly about 50 stocks. I did that for about 9 years, as I stated. I left the floor in the mid-90s to manage money, to trade my own account, and 6 years ago I started Specialist Trading, where we're just devoted to educating traders with all the things that I've accumulated in my 37 years and all the trading tips and techniques that I currently use in my own trading. So what I'm going to be teaching you today are things that I actually use. I was using just as current as just about a half hour before we went on the air, and I was trading the markets. So I'm going to be sharing with you all the things that I personally use. And remember, even though we provide our members with strategies, techniques, and with different signals and generated signals so that you can follow them, it's more about educating you. As I stated in the first moments of this presentation, we're really about educating you so that you can become a part of the process and you can make your own decisions. All right? I don't want you relying on some trading room or chat room or some guy on TV or some trading guru to tell you what to do. That's how, and I believe, why most traders lose. And I know this firsthand because this is what I used to do when I first started out on the floor. I used to rely on everyone else except myself and except what the market was telling me. So what we do at Specialist Trading is, to all our members and students, we teach you how to spot these different signals and different tips and techniques. And then, you stay with us. We mentor you. We stay with you hand in hand and trade right alongside with you. But then we want you to ultimately leave so that you can make your own decisions. Okay? So this is what we do at Specialist Trading. Now, before we begin, we are required to show you this, so please take a moment to view our disclaimer. I'm going to show you some performance results with these ways for fine-tuning your entries. But please remember that we can in no way guarantee that any of the results I'm about to show you will be repeated in the future. So please take a moment to view this disclaimer. And while you're doing that, for those of you who are new to my presentations, I like to take as many questions as possible, but I like to take them at the very end of the class. I like to run this more like a classroom. So please wait, write them down. If you have any questions, write them down and try to remember. I promise I'll get to them at the very end. The most commonly asked question I'll answer right off the bat is this being recorded? Yes, it is being recorded, so you can request a link to this recording. You can watch this if you have to leave early, or if you have to if there is something that is not working, maybe your computer shuts down, don't worry, you can contact us. As you see in the chat box there is an email address as well as a phone number where you can request the link of this recording sent to you. Okay? And before we begin, one last announcement. I'd like to invite all of you to follow us on Twitter. That's our handle right there, at SPCLSTTRADG. We recently started this just 2 or 3 months ago, and we've posted some great information. In fact, yesterday or the day before yesterday, we posted that we were going short the market, most specifically the mini Russell futures. And we posted that well before the market fell out of bed. You see that the market's really going down today. It was down yesterday. And so all of our members who trade the mini Russell had a really nice trade, including myself, going short the market. So this is what we do for our members. For the people following us on Twitter, you can see what we're currently doing. But for all of the members and the students, you will be privy to all of the signals as they occur in real time when they're generated. So I invite you to follow us once again at SPCLSTTRADG. Okay, so as I stated right off the bat, we are first and foremost an educational company. I provide all of my students and all of my members with strategies for trading the markets. I tell them and show them exactly how I trade, but I want you to become a part of the process. So many traders have really what I believe to be faulty information, faulty education. And I know this once again because I read all the books, I went to all the seminars, I followed all the indicators you're supposed to be following, and in my first year or two of trading I couldn't make any money. So I didn't understand what was happening because I was doing everything that was supposedly right. My mentors taught me that, Steve, the way to actually get on that road to consistency is to strip or let go of all this conventional wisdom and just learn how to listen to the market. So that's what I'm going to teach you today in today's webinar, and this is what I do at Specialist Trading. I teach you how to trade with the Specialist Edge. It's about keeping things as simple as possible and learning how to listen to the market, because in my opinion, that's the only thing you should be listening to. All right? So here's what you're going to learn today. Remember, once again, if you have any questions, please wait off to the very end of today's course, and then I promise I'll get to each and every one of them. All right, what I'm going to show you today are two simple but high probability techniques for fine-tuning your entries in any market. So it doesn't matter if you say, well, Steve, I only trade the currency pairs, or I only trade stocks, or I only trade Forex, or I should say E-mini on a short-term intervals. That's fine. These techniques work in any time frame, in any direction, and I'll show you a lot of examples. Now, I'm going to start off by showing you some older examples. They may even be like a year old. That's okay. I'm showing you those for educational purposes only. As we get towards the end of the presentation, when you understand the concepts, I'm going to show you some trades that happened as recent as today. Okay, so I'll show you how this really works in real time. All right, let's start out by seeing how most people enter into trades. Three of the most common ways, and these in my opinion are low probability entries. And this is what I feel why most people lose money, because they're using these ways to enter into a trade. First of all, many people look at overbought, oversold oscillators. They're looking to see if the market is too low. It's gone way too low. If perhaps some trading room or chat room says the oscillator we're following says that we're oversold, you have to buy something, or perhaps it's overbought, you have to sell something. Well, let's look at an older chart of Apple right here. We just have a standard slow stochastic plotted, and conventional wisdom tells us when we see that we have gone below the oversold threshold, as we do here, this is where you should be looking for some type of buy setup. Why? Because according to conventional wisdom, we're far too low. And that's okay. That's fine. I mean, we look to buy lows in an uptrend, but let's just say that we are in sync with being in an uptrend and Apple is pulling back here. Now, this is where you would normally say to yourself, according to your strategy, well, we've come down far enough, I'm going to buy right here, all right? Because you feel that we're really in oversold territory, so you decide to get in. And then as you purchase, the stock goes lower and lower and lower until ultimately you can't take it anymore. You said, boy, I've taken a big enough loss, and you exit. All right? You've lost a ton of money. You thought, boy, it was oversold, but it kept going lower and lower. So you exit the trade, and the minute you get out, look what happens. All right? Does that look familiar to anybody? Let's see how this works on the upside. Okay, let's say that you figure that the diamonds here, which are the ETF of the Dow Jones Industrials, are far too high. In fact, they're in the overbought territory. They've crossed over the threshold. So you want to sell. So you decide to go short. You sell at the market. Perhaps you belong to some chat room or some trading room where everyone is selling. You're all in unison going short the diamonds. And it doesn't really fall out of bed. In fact, it keeps going higher and higher. In fact, it gaps open on this day. You're starting to really wonder, boy, this is a bad decision here. And it doesn't stop even after that gap opening. In fact, the very next day we have a large move to the upside. So it looks like the diamonds, which reflect the Dow, are going to continue to go higher. So at this point, you just say, that's it, I'm exiting. I'm covering. I can't take any more of a loss. I'm covering my short. This is it. And then look what happens. Okay? So this is the problem with using an overbought, oversold tool to help you enter into the market. How about retracements? A lot of currency traders like to use these. Some stock traders, they like to go off Fibonacci numbers or even just round numbers such as 50% retracement or 75%. So let's just look at very common numbers here in an older chart of the E-mini. As we see here, we're in an uptrend because we've kind of drifted higher and then gapped open, and then we're pulling back, all right, on the 60-minute chart. So if we take the lows and the high, we want to retrace, let's say, 50%. So this would be your point at which you purchase at the 50% level, because usually, currencies or stocks or futures will pull back at least half of the distance of the move. So you decide to jump in, you buy at 50% retracement, and it works out great. All right, so you go, boy, this is fantastic. So you're waiting for another move, which happened right here, and so you start to say, well, we went back up again from this low to this high, and we're retracing. So you measure the points from C to D, you come back 50%, you figure, hey, it worked before, let's try it again. You purchase it again, and guess what? Boy, you're doing great now. I'm not going to say here that you held on the entire time, but at least you had a profit. So this is fantastic. You think you've figured out exactly what it means to trade. You've got everything under your belt. Retracements is the way you want to go. So you notice that, well, why not do it again? We're still in an uptrend, so we measure the low of this bottom right here to the top of this high, and we get back to 50%. You decide, well, I'm going to buy it again. Let's why second guess this method? It's been working fantastic, and you purchase, and nothing really much happens firstly, and then it starts to go lower. You figure like, well, maybe it's the 75% level, so you decide to buy more. You double down and buy some more at 75%, and it looks like it's kind of holding, but ultimately it goes lower and lower. So in the end, you've just about given back everything you made in the first two trades. So it worked well for a couple of times, but there's no consistency because this time it didn't work. Same thing will work in the currency pairs. All right, we have a downtrend in place. We have a top here and a bottom, so we rally up 50%. You decide to short. It doesn't go down right off the bat, so you short a little bit more at 75% level, and then it works great. So you figure, oh, thank goodness, that's great. All right, it works fantastic. So the market starts to move again, so you have another measured move. We're in a downtrend. When we get up to that 50% level, you want to short again the Australian dollar. It worked before. And now this time it rallies, so we short more at the 75% level. And it looks like it's going to finally roll over, but then it goes even higher. And now you've given everything back that you made on the first trade or so. So there's no consistency. Remember, we're looking for consistency on our trading. I don't teach things and I don't give you all the information I've accumulated that is guaranteed to make you 100% in every trade. That's not what we're looking for. We're just looking for things that are consistent in the market, because consistency will have you trading 20, 30, 40 years down the road, not some get-rich-quick scheme. Now, lastly, news events. There are so many traders I know that rely or depend on news. Once again, I know this firsthand because that's the way I used to trade on the floor. I used to wait until the jobless claims came out. Even at that time, we used to look at the money supply. I was talking about how long ago that was. We'd look at everything, all the earnings, and we wouldn't do anything until this news came out. Okay, so let's look at a way older chart here of the E-mini. And as you can see, nothing much is happening. We're kind of going sideways, but our technique or our strategy tells us that if we trade above here, this is very bullish. We're breaking out, so we want to be long if we trade above here after the news announcement. All right, so this is our point of entry. Well, on CNN, it's announced that the jobs report comes out and hiring continues as unemployment falls. So this is great news. This was a little over a year ago. This is great news. You'll see this happen all the time anyway, even though this is an older bit of information, but it's for educational purposes. So you see this is good news, and guess what? The market gaps open on a 15-minute chart, so you buy on the opening there because, hey, unemployment is getting smaller, or I should say employment is getting larger, unemployment is getting smaller. This is great news for the economy. Market's probably going to take off on this news. So you purchase right on the opening, and look what happens. Things begin to go south, and so you ultimately exit with a loss. Now, remember, oftentimes what the problem is that your trading idea is not wrong. I don't want you to think that, well, I'm trying to show you that everything you've been taught is wrong. It's not that. What we're focusing on today is that your entry technique may be faulty. So it's not just that you're trading a strategy that is faulty or that doesn't work. I'm not going to tell you that every strategy doesn't work. There are some fine strategies, maybe difficult to implement, but they work well. But oftentimes the reason why you are losing money is because your entry technique is faulty. So this is what we're going to discuss today. We're not just going to share with you what doesn't work. We're going to share with you how to implement a process with whatever strategy you're using. Even if you decide not to trade one of my strategies, if you want to continue trading something from another educator or presenter, you can add this on, and I really feel it'll increase your odds for success. All right, so let's get with 2 ways to fine-tune your entries, all right? All right, you may want to write this down, but remember this is being recorded. The first thing is you want to look for bars that close in the top or bottom 25% of their range. In other words, if you have a signal that told you to go long, that you want to buy regardless of what market it is, you should be looking, once you get that buy signal, look for a bar that closes in the top 25% of its range. If your strategy generates a sell signal, you need to look for a bar now that generates, or I should say that closes in the bottom 25% of its range. All right? So that's what you're looking for. Now, this may be on the setup. In other words, the minute you get a signal, this may be in that bar, or it may not, and you may have to wait for one of these bars to show up. Now, a lot of people have trouble figuring out what this means. They go, well, Steve, what do you mean? Like when I'm looking at a candle or if I'm looking at an open, high, low, close, are you talking about the opening as opposed to where the candle opening is? Forget about openings, closes, anything of that nature. We're just looking at, and forget about candlesticks as opposed to bar. It doesn't matter, whatever type of bar you're looking at. And this can be a 5-minute bar, it can be a weekly bar, a daily bar. Just the high of the range, and take the high of the range and the low of the range. So the very high and the very low, and that's your entire 100% range. Now just simply divide that by 4 separate but equal parts. All right, the bottom 25% will be that bottom quarter, and the top quarter will be that top 25%. If you're looking to go long, you want to see bars closing in the top 25%, the top quarter. If you've got a short signal, you want to see bars closing in the bottom quarter. Doesn't matter if it's a candle, doesn't matter if it's an open, high, low, close bar. It just take the very high of the bar and the very low. Okay, now once you've found that, we go on to rule number 2. Only enter if price trades 1 tick above or below, depending on your long or short, those bars that close in the top or bottom 25% of the range. So that's your entry point. Just because you find a bar that closes in the top 25% doesn't mean to buy at the market. It has to trade at least a tick above there. Now, some of my members and students like to wait for it to trade anywhere between 1 and 5 ticks or 1 and 5 pips. That's fine. It's not written in stone here that it has to be just 1 tick and you jump in at the market. It can trade up 3 ticks for your confirmation. But it just has to trade above the bar that closed in the top 25% to go long. Or if you got a short signal, it has to trade below the bar that closed in the bottom 25% in order to go short. Okay? That's it. These 2 rules, in my opinion, will ultimately increase your odds for success dramatically, regardless if you're trading one of my methods or if you're trading something else, something that you devised or something that you purchased from another presenter. All right, so let's look now at some high probability entries. Let's look and see how we can implement these 2 things and see how they would have helped us, especially in those examples we just showed. Remember we talked about the overbought, oversold oscillator. Well, here's that first example with Apple. Remember, you firstly wanted to purchase here because we closed on its low, and you figure like, boy, it's an oversold area. It closed on the low. Man, I won't be able to get it much cheaper than this, but guess what? You could have gotten it much cheaper than that, and you exited right here. If we look here from the moment you got the buy signal to the moment you exited, there was never 1 bar that closed in the top of its range. You see here that we closed in the middle, we closed in the middle, at the low, at the low. So this was telling us you should never have entered into Apple. You know, we're not saying that it wasn't right to purchase it. We're just saying that you should never have entered yet until you found a bar that closed in the top 25%, which is right here, circled in blue. So this is your signal. Now it's time to get ready to enter. But we can't just buy at the market. We have to see that it trades above, and it did on the next bar. So you would have entered right here, regardless of where you would have entered. Now, you could have purchased options. I know Apple is a very expensive stock. You could have purchased options or maybe bought maybe 1 or 2 shares. It doesn't really matter. But look what happened after that, okay? So do you see how waiting for that bar that is in the top 25% and then waiting to purchase once it traded above that increased your chance for success? You would have sat out this entire sell-off and gotten in at the moment it started to head upwards. How about the diamonds? Remember, we wanted to go short because we were in the overbought, so-called overbought territory. We closed at the high here, so you thought, boy, I'm going to short it at the very top. It's going to fall out of bed tomorrow. But it never did. It continued to go higher and higher. We're looking for a bar in its bottom 25%. We never got one, and so you would have had a nice loss here. But had you waited for that bar in the bottom 25%, you would have seen that it would have been this bar, the bar after your exit when you got stopped out. You got scared after this big up move. So that's your signal to get ready to go short. if you still feel that the diamonds are meeting all of your strategy rules to go short, this is your warning or your target here to look for. But we have to trade below it. And guess what? We traded below it the next day, and look what happened. So you see, it was right to short the diamonds. You just entered too early. You didn't look for that bar that closed in the bottom 25% of its range. How about news events? Okay, remember we talked about news events, how you can't make a decision until we wait and see what the numbers are, the earnings or the job reports or whatever's coming out. Well, here's where we decided to jump in once we closed above this recent high. This was your strategy, whatever it's based off of, telling you to go long. But look what happened. When the bar closed, it closed on the low, closed on the low. Now this bar closed near its high, but it was actually this bar that closed in the top 25%. So if your strategy was still saying you should be long the E-minis on a 50-minute time frame, this is the bar that you should have been looking for. All right? So all you had to do was buy it once it went above there on the next bar, and guess what? You had a nice trade there in the E-mini. So you were right all along. It was just your entry that was faulty. How about retracements? Remember we talked about the pullbacks. Here's another pullback in the E-mini. We have a top, bottom, and then we have the 50% retracement. Now here's one of the great techniques, or I should say the great extra bonuses you get with using this technique. We're waiting for a bar to close in its top 25%. Since we're going long, we want to see a bar that closes in the top 25% of its range. And we will not go long until we find one of those bars. And so our strategy gave us a buy signal right here. And so instead of just purchasing at the market, we're going to wait for a bar that closes in the top 25% of its range. Well, this one does right here. So guess what? Now we can buy if we trade above it on the next bar. Did we trade above it? No. So this technique kept us out of trouble. So we're still waiting. We're still waiting. And we get to the 75% level. Now this is where we would normally purchase again. But because we're using the technique I taught you today, we're not even in yet. So we're still waiting for a bar that closed in the top 25%. Well, this one did. So now we'll buy if we trade above there on the next bar. Guess what? We never did. So we continue to go lower and lower. And so one of the great extra bonuses of using this technique is that many times, on top of entering, having a fine-tuning of your entry and getting you in when the trend goes in your direction, often it will keep you out of trouble. In a losing trade, it will many times keep you out of trouble, such as this example. So you would have never even have entered into this trade, and you would have never lost any money. Why? Because it never traded above the bars that close in the top 25% of their range. All right, so let's look at some current examples. What we've been sharing with you right now are just, educational examples, just so that you really fully understand the concept. Remember, my whole thing is about education. I want to educate you so that you can apply these things, hopefully, to get you on that road to being consistent. That's really what we're trying to do. But we share this through perfect examples, ideal examples, and I know a lot of people will say, well, Steve, that chart is a year old. How's that going to help me? How do I know it works? Well, let's show you some examples that are maybe a month old. Let's show you some examples that have worked in the last couple of days. All right, here's a chart of Twitter. Now, we've all heard the news. There's terrible news coming out on Twitter, reports, the company's going down. All right, we're not concerned with that. We're only concerned with implementing these techniques for entry. Now, obviously, Twitter, since April or so, has been in a downtrend. All right, so this means we're only going to look for short signals, and we have a short signal. All right, so let's say we have a nice bounce here. Well, this is where we want to short because we still are in a downtrend. But remember, normally someone would sell right here and say, we've gone up high enough. That's a tremendous, jump. But according to my strategy, this is where I want to short because I want to get in at the very top. Remember, if we're shorting, we have to look for a bar that closes in the bottom 25% of its range. So we wait and we see that there are no bars that close in the bottom 25%, and Twitter continues to go higher and higher until we get to this bar. So this is our bar here that we've been looking for, and now we can implement our short entry once we trade below this. All right, this is where we're going to sell. It would roughly be about the same price. This is the first question that most students say. They say, well, Steve, if I would have sold here, I would have got the same or even better price as waiting to sell here. So what's the point? Why would I have to do that? The point is that as traders, myself included, the minute you get into a trade, you want to see it go in your desired direction. You don't want to get in the middle of a trade the minute you get in and it goes the opposite direction. It's very discouraging. You start to doubt your strategy. You start to worry. Sometimes you have sleepless nights and you think, boy, should I get out of this? So oftentimes you'll scare yourself and you'll throw in the towel. So what this technique does is that, it's not guaranteed, but many times it'll get you in right at the moment that it's going in your direction. So conversely, if you had sold here, you may have scared yourself. You started to think and double, guess your strategy, and you would have stopped yourself out. Whereas if you use this technique, you would have entered the next day, and look what happened. All right, this chart was current up until I believe this last week or so. How about the futures? Here's the E-mini futures, which was a chart from last week. All right, we are in an uptrend right now, and you don't want to miss this on a 5-minute time frame. So you figure, I'm going to jump in and buy, okay? Because you're excited. Now we didn't close in the top 25%. We kind of closed somewhere in the middle or close to the middle. So this is not actually something you should be looking for. We want to find a bar that closes in the upper quarter of its range, okay? So we see here that had you purchased, look what would have happened. And we have all these bars that closed in the bottom 25%. But guess what? Here's a bar that closed in the top 25%, circling green. So this would have been our first signal to enter. Excuse me. But the only way we would have entered would be if we traded above, which we never did. So this stopped us out of being in the trade. And the market didn't go any higher. But about towards the end of the day, guess what? We got another signal to go long. We closed in the top 25% of our range. So you would have entered, and that's where the trend continued in your direction, okay, towards the close of this day. So you see how simple this is. Now remember, this is just an entry technique. I know a lot of you will be saying, boy, well, Steve, where do I place my stop? Where do I exit? We're not talking about stops and exits today. The purpose of today's presentation is how to fine-tune your entries. How about the Australian dollar? Now, let's just say we're just looking at this for trend purposes. Say your strategy just goes with the trend. We don't look for pullbacks. We don't look for bottoms. We just want to buy. There are a lot of strategies like this, all right? Well, all you have to do is look for bars that close in the top 25%. You think there's a lot of bars closing in the top 25% of this daily bar? This was up until the end of April, this chart, okay, as the Australian dollar was rising. So do you see, when the bar closes in the top 25% of its range, it's giving you a clue as to which direction it's most likely going to continue. All right? You didn't see a lot of bars closing in the bottom 25%. Now this is a great clue. It's not enough to have a full-fledged strategy based on, but it's a great, great way to fine-tune your entry. All right, so let's recap before we go into the question and answer portion. We showed and I taught you two simple but high probability techniques for fine-tuning your entries in any market. I gave you examples in the stock market. I gave you examples with 5-minute charts in the E-mini. I gave you examples looking at the Forex currency pairs. All right, so this is a great technique that you can either make a strategy based off of this. You can apply it to any current strategy you have, or you can become a member of Specialist Trading and trade our methods, which I would say about 90% of our trading methods are based and use these techniques. Now, points to remember, because I know you're going to have questions once we get to the question and answer portion. You're going to have questions about this. This is not a complete strategy. Remember, the title of this presentation was how to fine-tune your entries, two ways to fine-tune your entries. So this is not a complete strategy. In order to have a complete strategy, you have to, have other entry techniques as well. You have to have a stop placement. All right, we didn't talk about stop placement because this is not a strategy. We didn't talk about exits. Once again, you need all of these pieces of the puzzle to come into place to have a strategy. We didn't talk about money management. How many shares? How many contracts? These are all pieces, very important pieces of the puzzle in order to trade. You can't just see this and go, okay, boy, I'm going to start using this as soon as this completes today, this webinar. But Steve, where do I exit? Or where do I place my stop? Once again, you only place stops and exit orders if it's a strategy. We didn't share a strategy with you today. We shared with you an entry technique. Now, if I can just take the last couple of minutes to share a strategy with you that incorporates these two things we talked about. This is probably one of my most consistent strategies. It's strategy number 4. The reason why it's so consistent is because it transfers over onto any market. Now right here you see the graphic says E-mini strategy 4. But really you can apply it to stocks, the E-mini, ETFs, and the Forex markets. Okay, that's how great this strategy is. Let me just show you a couple of current examples. Here's an example in UPS. All right, we can apply the same strategy you would use in any market. These are actual sell signals that were generated that our members would have seen. They were all buy signals using this technique. If you notice, all these buy signals were generated. You see where the bar was? It closed in the top 25%. And you would have entered once you traded above. Here's another one right here. And look at this signal that was entered just about, I believe, about 5 or 6 days ago. So these are all valid signals. We can use the exact same rules and apply them to a weekly chart of the euro dollar. Now these are weekly bars, but if we see here, these are all signals to go long, all where the bar closed in the top 25%, and you would have bought on the next bar. All right. I believe there would have been, if you were using our conservative method here, you would have had one loss with this bar right here, because after you purchased it went a little bit lower. But then you would have recouped it about a month or so later on this signal. And then lastly, I want to show you how you can use this. We've showed you how you can use it in stocks on daily bars, on the Forex currency pairs on weekly bars. How about today? All right, this is a 1,000 tick bar chart. This is what I was trading this morning. Strategy number 4, these were all the sell signals in the first 45 minutes of the day. We know that the market was going straight down today because of our proprietary techniques to discern what the trend was. We knew that we should only be short the E-mini. We were not trying to buy or pick any bottoms at all. We were only looking to go short. Well, how would you like to trade strategy number 4 on a 1,000 tick bar chart? These were all sell signals, valid sell signals to go short the first hour of today. So when people say, well, Steve, I only trade stocks, or I only trade futures, I only trade currency pairs, look how consistent this is, as well as look how current this is in today's market. These are all strategy number 4. You see how well you would have done trading this. Now, we're offering this usually to people who are interested in strategy number 4 at $6.95. That's an extremely inexpensive price, as you saw all of the money you could have made this past couple of weeks trading that in all those different markets. But for all the attendees today, especially I know a lot of you couldn't make it, but you tried as well to get here at 8 a.m. Pacific time, we're dropping the price $200 down to $4.95. Just with the trades alone that you would have taken had you used this on the E-mini, you could have paid for this many times over. So this is an extremely great strategy. I use this on a daily basis. Once you sign up for this, if you want to sign up today, you get instant course access. You would get the rules to this probably in the next 15 or 20 minutes. This comes with detailed instruction, 5 videos. We teach you not only the entries, but all the exits, all the stops, and advanced exits and advanced stops for those of you who would like to trade this a little bit more aggressively. We provide you with signal alerts on daily bars. We also give you weekly trading video lessons that are archived so you can hopefully elevate your trading. This comes with a free buy and sell add-on. So in other words, you apply this add-on and it generates up and down arrows so that you can see when a signal is generated. So this is a great learning tool when you're learning this to see if you're in sync with the methodology when an arrow is applied. This can be applied to NinjaTrader, TradeStation, MT4, and MetaStop. And then finally, access to my personal email. You can contact me anytime you like, and I will answer you just as soon as I can and answer any questions that you may have. This is such a great deal for $6.95. It's an even better deal for $4.95, but that's for a limited time only. Remember, it comes with all these things, the add-on, the bells and whistle, the email access to myself, detailed instruction for $4.95, but just for the next couple of days only. So if you're really interested in really taking your trading to the next level, applying the things I just showed you along with a great strategy that just has about 5 rules, I really urge you to take advantage of this discount. Now you can contact our trading consultants at trading@protraderstrategies.com. You can email them, or you can call us directly at area code 310-492-5393, and that's how you can take advantage. And also, if you look at, I believe on the right, there is a link underneath in the chat box that you can simply press on there. If you don't want to speak to anyone, you're interested in purchasing right now, it will take you right to the discounted link where you can be a member of Specialist Trading and start trading strategy number 4. Remember, I'm your personal mentor. I'm your teacher. I'm here with you every step of the way. So it's not something where we just give you the video and then say good luck. Any questions you may have, any ideas or anything in how to trade strategy 4, you email me and I'll be there with you every step of the way. Okay, so we are now at the question and answer portion. I thank you. If you had questions, I thank you for waiting. Once again, this was recorded and is being recorded, I should say. So if you have to leave now, or if you want to view this for the next day before making a decision, that's fine. I just urge you that you make your decision in the next couple of days before the price goes back up to $6.95. Let me see here. Let me see if there are any... Hi, James is a long time. I see James had a question. He's a long time student of mine, and James says it's confirming the move, a confirmation entry. Yes, yes, James. Basically, when what James is talking about, when you trade that 1 to 5 ticks above a bar that closes in the top 25% of its range, you're confirming that you're going in that direction. In other words, I like to use the analogy of a train station. I've used this many times, but bear with me if you've heard this before, but for the new people in my presentation, imagine you want to go from point A to point B. You're taking a train, okay? So you're at the train station. You're waiting for the train to come down the tracks, and you see a train that's coming down the tracks, but it's going in the opposite direction of where you want to be headed. So are you going to jump on that train? Well, most people will. They'll jump on when they're trading. They'll see like, well, I want to buy, and the market closed on the low, so I'm going to jump on that train. And most likely, it continues to go lower in the direction. What we want to do is wait for the train that's coming, and it's headed in our direction. And that's when we jump on board. So by the way we see that in trading, we're looking for a bar that closes in the top 25%. If we want to go long, that means the train is headed in our direction. It's giving us a clue that it's most likely going to continue that way. And then we just jump on board once we see that the train has left the station. In other words, we jump on board once we see that we've traded above that bar that closed in the top 25% of its range. That's it. That's all we're doing. We're waiting for the market to give us a signal or a clue, and then we jump on board. Okay? Thank you, James, for that. What is the indicator, MACD or stochastic? Hagi, I believe, is asking on that example I showed. That was a stochastic. That was just your basic slow stochastic. I didn't change anything. I didn't change or edit the default. I simply went into my indicator box. I clicked on slow stochastics, and that was the overbought was at the 80 threshold, and the oversold was at the 20. And that's it. And that's how most people trade. They'll just use these standard indicators and say, well, when I'm overbought, I sell. When I'm oversold, I buy, because that's the way you're supposed to trade, right? Well, not really, according to what we teach at Special Trading. Chris asks, does this theory also apply to Forex? Well, yes, it does, Chris. I showed a number of examples in the Forex markets on daily bars, on the Australian chart, also on weekly bars, which I believe were the British pound. So yes, it does. It works great, and strategy 4 works great on the Forex markets as well. One thing I want to say about strategy number 4, don't worry if you haven't been trading a long time. We have people using strategy number 4 in over 60 countries around the globe. And these can be anywhere from people that have been trading for a couple of weeks to hedge fund managers. And guess what? Everyone is trading the same rules. I trade, after 37 years, I use the same rules that someone is using when they become a new member of our website who's been trading for maybe a couple of weeks or a month. So there's no difference. Now we teach you ways in which to enhance that if you want to trade more aggressively or more conservatively, but the basic format is the same for everyone, okay? Bill asks, does strategy 4 give alert signals on TradeStation trading crude oil? Yes, it gives it on any market. So in other words, once you get the add-on, all you have to do is upload the add-on, and whatever chart you're looking at, whether it's an hour chart, a 5-minute chart, a weekly chart, whether it's crude oil or the dollar yen or Apple, it's going to generate buy and sell signals when they are generated, when they meet all of the rules. So yes, it will work on that as well. Okay. Pat asks, when and where can we review the recording? Well, Pat, if you look on the right, or if you see there is a link. You can also, right in front of you on the screen right here where it says more information, all you have to do is call that number or send an email to that email address and request the link, and they will send it to you. Okay. The next question is, what if a bar closes in the top 25% of the range, then opens higher? Okay, that's a great question, and that usually will happen, with the stock market. So what we tell people, and this is just something that comes in the course, but I can share this. You can get a pre-market indication. This happens a lot. In fact, I generated signals for purchasing the other day for certain markets, and they gapped open 2 to 3 points higher. Now, obviously, we don't want to buy there because this is most likely where we want to be selling. So what you want to do is get a pre-opening indication. Most of the charting software packages or brokers give this information to you. And I know a specialist, they will give out a pre-opening indication if it's going to open above or below the price by a certain limit. So that's how you know. If you have this pre-open indication in XYZ and it's going to open 2 points higher, well then cancel all your orders. You don't want to be in the trade. Okay, so it's that simple. Let me see here. Let's go to some other questions. Let's see, the sound is good. Chris asks, if long and a candle closes in the bottom 25%, do you get out? No, Chris. Remember, we're only using this as an entry technique. All right, so you're trying to use an entry technique to exit. This is just an entry technique. Once you're in, then we have an entirely different set of rules for stop placement or for moving your stop up to unchanged. These are all things we teach in the course. But you're not going to use an apple to define an orange. Okay, you're not going to use an entry technique to define where you exit. That's just something totally different. Okay. Let me see here. Lee asks, does this work for long options since markets are so volatile? What time frame? Do you use higher time frame for direction of trend or lower time frame? Okay, Lee, we are not an options class per se. We don't have courses which deal with option trading, but we have many traders or that are members of specialist trading that only trade options. And how they use this is that they will just simply, if they get a buy signal, they'll just follow the stock, they'll follow the chart, and when they see they trade one tick above or one tick below on the actual equity, then what they'll do is go along the calls. All right, so they'll get all of their signals off of the stock. In other words, if they get stopped out, then they simply sell at the market their option. Now, what we can suggest is that, and what we tell many of our members, is for those really nice gains, we want you to trade weekly charts, right? Because we know that there is a time decay when you have options, and if you're looking at daily bars, you can lose a lot of money. But if you're looking at weekly bars, well, this will give you a longer term, and you can be in that and really hopefully get those nice gains. So we'll look at weekly signals, such as I showed you on the British pound, but they can apply for stocks as well. And the minute you trade one tick above, you would buy the call. Give yourself plenty of time because you're looking at weekly bars, and just apply the same rules. But instead of buying the stock, you simply buy the call, whatever one you're interested in. If you get stopped out, or if you get to your exit point, instead of selling the stock with a profit, you simply sell your option with a profit. Okay, it's that simple. In terms of defining the trend, it's not my practice to look at a higher time frame to discern what the lower time frame is. I personally just like to trade the chart I'm looking at. So if I get a buy signal on a daily bar, that's all I'm interested in. If I get a buy signal on a 5-minute bar, that's all I'm interested in. I don't look at the daily or the hourly bar to tell me what to do on a 5-minute. I have found no consistency in that. Now, having said that, we have many students, many members who swear by this technique. They say, now, Steve, you're going to get high probability techniques if you have the higher time frame confirm the lower, and that's fine. So see, that doesn't really alter any of our rules or the philosophy of specialist trading. We're not throwing in some wild indicator or making things overly complicated. So if that works for you, then fine. You're more than welcome to do this. This is the way we teach a specialist trading. We're not a systematic company. We don't teach systems. We don't have numbers and statistics going back 20, 30 years. We're not about that. We're just giving you sound educational information that can be traded in a number of different ways to meet your needs, and then we are there with you and hold your hand so that you can ultimately be consistent in your trading. Okay, let me see. How can we access, Lee asks, how can we access the video replay? I would like to review before I sign up. Also, is the $4.95 all the costs for everything? Will there be any other charges? Hi, Lee. No, there will be no other charges. That is the full course price for everything. It's not. We're not going to add, first and foremost, at Specialist Trading and Pro Trader Strategies, we're traders first. So we're not going to have you purchase this and say, well, it's an extra $200 if you want to get the advanced courses. No, this is all included in the Strategy 4 course. Now, we have other courses if you want to that are a little bit more advanced. If you want to upgrade to them, sure, that would be a totally different price. But because you're already an established member, most likely the trading consultants will give you a discount when you want to upgrade to a different, more strategy that follows different rules. But for right now, everything included what I went over. In fact, let me just backtrack and show you what's included here. This is what's included in the actual course: the instant access, the videos, all of the rules, the archived videos, the add-ons, so you can have the signals generated, and access to myself. So this is all included. But the only thing that is subject to change is that really deep discount at $4.95. Trust me. if you would have taken all those signals I showed you today in the E-mini, you could have paid for this many times over. So that's how well this works. You know, I'm not going to sit here and guarantee that it trades like this every day, but we're trying to instill consistency in you. We're not trying to, you know, sell you some get-rich-quick scheme here that promises you 5,000% in the first year. We're just trying to say, listen, these have stood the test of time. Steve trades these personally, and come along with us and trade these and have some consistency in your trading. So this is all we're trying to do. Okay, so this is all included for that deep discount of $4.95. But remember, that's only for a couple of days. So if you want to take advantage, here's the information that you contact. You can either go and see on the right, there is a link there with the $200 discount off. You can simply click that on and you can sign up, and you'll be seeing the video in the next 5-10 minutes. Or give us a call, all right? And that's how you can access the link to the recording as well. Okay? A few more questions before we have to sign off. I have to get back to trading and to answering some more emails. Bill asked, this is a very important question. Bill asked, can we split the payments in two? Yes, Bill. I'm sorry, I forgot to mention that. I know even now that $4.95, even at a deep discount, may be difficult for some people to meet. Yes, we have payment plans available. So you can break that up into a number of different ways, and our trading consultants work with you. So if you can't have a full payment of $4.95, they will work with you either in a few payments, 2 or 3, 4 or 5, anything to get you up and running as soon as possible. Okay. Let's see. Bill asks, can you show the chart again with alerts? The alerts give signals that are audible as well as alerts on charts? I'm sorry, I don't want to backtrack, Bill, but just to answer your question, the alerts are not audible, but they're simply meant to show you as a learning tool. I don't want people to rely on these you know, up and down arrows or up and down little dots to show you when a signal is being generated, a red or a green dot, because after a while you didn't become a part of the process. Remember, we're about teaching you how to become a part of the process. I don't want you to rely on outside sources, because if you do, well then you go against the entire philosophy of specialist trading. We're more about educating you so that you can spot these things for yourself. I stated that in the very first 5 minutes of the presentation, that I want you to spot these things on your own so that you can ultimately leave and make your own decisions. I don't want an outside source, either a trading room or a chat room or somebody on TV or even an indicator, a red or a green arrow telling you what to do. I want you to know why you're doing it. So the add-on is meant as an educational tool so that you see that it's like checking your homework. If you think that a strategy number 4 signal is being generated and you're not really sure, but then you see the arrow is there in real time, well then you go, well, I'm learning this process. Trust me, after a couple of weeks, maybe at the most a month of learning the process and watching the video, you'll be able to spot them even without looking at the add-on. I don't use it personally. I've been trading it for over 30 years. I never look at I never have the arrows, because I know when a strategy 4 signal is being generated right off the bat. So the only thing, we don't have an audible alert with that, okay? Let's see. Does the $4.95 include all new updates? Well, Bill, we've been, have strategy number 4. I've been trading this for many years, and there are no updates. We've never increased the price due to any updates, or it's not the type of a type of systematic system that has to be upgraded and changed with the environment of the market. Once you get strategy number 4, that's it. I've been trading this, like I said, for over 30 years. I've never really altered or changed anything. And if we do change something, it's more like a technique that we've gained, that either someone has presented to us or we've seen in the current conditions, and we just share it with all our members. It's nothing that we're going to add extra that's going to cost extra. And remember, we do have many other methods. We have trend identifiers. We have other strategies for different markets, different time frames. And once you upgrade to those, yes, they will be a totally different price. You'll have to pay for those. But you're purchasing something entirely different. Once you purchase the Strategy 4 course, it's yours for life. That's it. And there's nothing really extra that you're going to have to add on unless you want to get an entirely different strategy or technique. Okay? Just the last couple of questions here. Jay Davis is asking, according to your other techniques, would it be correct to say that we would only take longs, for example, with the strategy if we were above the 50-period moving average? Yes, that's another technique that we talk about in other presentations. But yes, So without getting too much in detail about that, because that's an entirely different technique, is that once you're above the 50-period moving average, you only look for long entries. And once you're below the 50-period moving average, you only look for sell entries. All right, so that's it. That adds another piece of the puzzle to this particular strategy that's incorporated. Okay. Razif asks, can I make 3 separate staggered payments, sir? Yes, you can. I don't deal with any of the sales. I'm just the trading and teaching part. That's my role at Specialist Trading. So anything that you want to do can be put together through our trading consultants, Razi. All you have to do is call this number, okay? They will contact you either by you contacting or emailing, and they will set up a payment plan that best suits your needs, okay? You know, we're not going to sit here and say, no, you have to pay $4.95 right away. We need it, and that's it. Sure, if you're having trouble making that, we can stagger the payments. Thomas asks, it tells you when to get in. Well, I just actually, in the technique I shared with you today, I tell you when to get in. I just told everyone when to get in. If you have a long signal, you get in when you trade 1 to 5 ticks above the bar that closes in the top 25%. That should most likely be on the very next bar. Okay, so you automatically know when to get in. And what these arrows and buy and sell signals do is they tell you when a setup bar is in place. All right. So once you have a setup bar, a bar that closes in the top 25% that meets all the other 5 rules, then you just simply buy if you trade above it, and you just do the reverse for an exit. Okay. Lastly, if you're using a 50-period simple moving average, guess what? It doesn't matter what time frame. You can use it on a 5-minute bar. You use it on a weekly bar. You use it on daily bars. It doesn't matter. So that's the beauty of things. We like to keep things as simple as possible. So if you're trading intraday, the way I traded this morning, I looked at a 50-period simple moving average. Price was below, so all I did was go short this morning. Once price goes above the 50-period, then I'll only look for buy setups. That's it. That's all it is. It's that simple, okay? Remember, if you're serious about taking your trading to the next level, I strongly urge you to take advantage of this deep discount strategy 4. It's probably one of our most consistent strategies. It works in any time frame, in any market, and especially because I'm there with you every step of the way to teach you and to mentor you. So I want to thank you all for attending today. Remember that discount will only last for a couple of more days. If you're interested in having staggered payments, that's fine. Simply use the email address or call us directly, and we will set it up for you so you can have a payment plan. Lastly, if you want to just sign up right now, if you really want to become a member right away, here's a link on the far right underneath the chat box. You simply click that on, and you can be trading the strategy number 4 rules and understand them within the next 20, 30 minutes. I want to thank you so much. Thank you for attending at this early time today. If this works better, send us an email. We'll have more of these at 8 a.m. Pacific time. If not, we usually give our presentations right after the market close. Thank you so much for attending. We'll see you next time. Bye-bye.